Hello traders, today is the 12th of May. My name is Hornsey, market actually trading, and today I'm looking at the Japanese yen. We're starting with the Forex heat map on YouTrading.com. You can see that the Japanese yen is currently the strongest currency across the board, closely followed by the US dollar. Looking down, we've got Australian dollar as the weakest, closely followed by the Chinese yuan, and then also the euro is also weakening. So currently, bottom left-hand corner is red, top right corner is turning green. More of a risk-off day today, as we see flows into the safe havens of the yen, the Swiss franc, and the global currency, US dollar. Looking into the news, earlier today, we had UK GDP preliminary QOQ for Q1 and year on year. Came in under expectations, did actually beat the previous reading on year for Q1. However, because we didn't make it up to the 9% that was expected, we are seeing weakness in the pound today. UK GDP estimates for the month of March also came in under expectations and shows a lot weaker reading here month on month than we did the previous reading. We also had weaker data from China. Chinese foreign direct investment year to date for April, 20.5%. So that's under the 25.6 previously. So we're seeing that the lockdowns and supply chain disruptions are also discouraging Chinese foreign direct investment, which isn't good. And we're also sort of waiting now for the US inflation data. Obviously, we had CPI yesterday, looking for PPI to come in today. Some of this is final demand. So, expectations are probably going to be met there. But overall, I think this is probably going to go a little bit higher than expected. Also, got US initial jobless claims, looking for those to drop this week down to 195,000 from 200,000. Obviously, if we get a revision higher in the previous reading or we don't meet expectations, that would be bad for the dollar. But currently, the dollar is very strong. If you are trading in the US session and you're waiting for the NASDAQ, S&P, etc. to do something, you might have to actually wait until after 6 p.m. British summer time to see what happens after this auction in this fixed income here. So looking down, I think the US session is probably going to be just as volatile as the London session, and we're just waiting to see what happens. So looking at the active trader platform, dollar versus the yen, this is quite an interesting chart because here's the FOMC candle on this 4-hourly chart. We thought we had trapped the short sellers here. Obviously, if we go to the sentiment indicator on active trader platform, we can see that 72% of the traders on this platform are trying to short the dollar versus the yen, as they have been for many weeks now. So we thought we had trapped them in this candle here. As we saw prices come back up, retrace that move, they obviously puked their position here. We saw a breakout retest on this candle, continuation to the upside. Got, in terms of risk, if our risk was down here at the FOMC low, then we actually saw a risk to reward of 1-to-1. So, bang on to the pip. So lots of traders were obviously watching this. We didn't make it up for another measured move up to TP2. We did come back down to the FOMC sort of an initial price. We traded through that quite a lot yesterday, and then we came back down. We've just swept the lows of this sort of low here from FOMC. Whether or not we've just cleared some stops there or not, I don't know. We could possibly come down towards the 127.50, where this sort of move here into this range sort of occurred. Obviously, there were some buyers down here before, probably going to be some buyers still there. But if we look to the left, and you sort of just look across the sort of swing highs, swing lows, we're kind of at a pivot level. So I'm expecting the dollar versus the yen to carry on going up, see if we can stop out those traders that are mainly short on this platform. It looks like we've just encouraged them to go short again. So, with the breakout to the downside of this candle, traders would have probably initiated more shorts if they're breakout traders. If we were to come back up towards 129.5, sort of test the lows from earlier this morning, if that acts as resistance and we come back down lower, maybe we do test the 127.5, or we could be doing this thing where we test the lows of the range, then test the highs, which is basically what I'm sort of trying to indicate here. So if I just make that white and fat so you can see it properly, we could have tested the low of the range, then test the high, and then if the center of this range, the sort of median, the midline of this range holds, then we could then get a push up to the upside and a continuation higher. Or obviously the buyers could have stepped in here with the breakout sellers, selling to them. The buyers could have now be just going straight up, who knows. But at the moment, just waiting to see what happens. Dollar versus the yen in my book is to go a lot higher based on what's happening with the Fed. They're very hawkish, and the Bank of Japan are very dovish. So the dollar versus yen should be going up a lot higher, in my opinion. If we go back to the Aussie yen, you can see that we're below the 200 period moving average. If I just turn on the drawings, I've got a head and shoulders pattern here. So lots of traders would have been looking at this head and shoulders pattern. The neckline is sloping downwards. So for me, that's a good signal that this is actually a topping pattern. It could be within a 5-wave impulsive move. So if this ending here towards the head was the 5th wave of a larger 3rd wave, I know it sounds complicated when we talk about like waves within waves, but essentially if we're in an impulsive wave, we're just looking now for this sort of impulsive move from January, end of January, up to the highs of April to correct in a wave 4. That could come all the way back down to this market structure here around the 84 before bouncing higher. That all ties in with what expectations are of a head and shoulders pattern. We're waiting for a measured move from the head to the neckline to then move down again. So that takes us down here, which is quite close to this market structure to the left. We could also get a ×2 measured move, which then takes us below this swing low here, which then undoes, sort of makes this Elliott wave type of theory invalidated, and we're actually in a bigger correction. But for me, I am expecting this market structure around 84 to hold. That sort of ties in with a measured move from the head to the neckline, this breakout down. So I am expecting the Australian dollar versus the yen to keep coming lower. Now, the Australian dollar versus the yen has always been our sort of risk on, risk off Forex pair. We're obviously seeing a lot of risk off in the equities, and I'm expecting this Aussie yen to continue lower and almost dragging down the Nasdaq and the S&P with it. Looking at the euro versus the yen today, obviously big moves in the euro versus the yen. Had this big sell-off at the London Open. Underneath the 4 hours 200 period moving average, I think we're coming down to sort of test this breakout here. So we had this range, we have had a test below, so they took out the liquidity below it, then they took out the liquidity above, looking for a measured move to the upside. So if I was just to move that there, you can see we had a measured move of this range to the upside. Could possibly be coming down to test the center of that range again before moving up, or we could possibly bounce off the market structure that we saw here acting as resistance before, now could be acting as support. And then finally, pound versus the yen, obviously with that weakening UK GDP data, I am expecting this impulsive move that we saw from the sort of lows here from March up to the highs of April. Looking for this impulsive move to be corrected. We're looking for a ABC. We're expecting a measured move down to the 154.5, and maybe this market structure to the left here from the tops of March. So that's what I'm looking for at the moment. Corrections in the yen pairs with moves into the safe haven yen at the moment, sort of allowing this correction to sort of take place. We are in a bit of a pause at the moment, so looking down to a smaller time frame. Now we've had big sell-off in the sort of start of the London session. Now we're waiting to see if we get a pullback into one of these sort of gaps here. So we had a sort of impulsive move here at 8 a.m. Look and see if that London open holds, and then maybe for a continuation to the downside. So could possibly get something like this today into the US session. But like I said, the higher time frames suggest that we are getting a little bit closer to an ABC move sort of completion. So I won't be marrying this trade into like the overnight sort of sessions. That's what I'm seeing on the yen at the moment. Obviously, keep an eye on the Forex heat map to see if we get a shift from the bottom left-hand corner to start turning more green. But the economic data and the news headlines especially are looking quite bearish. So that's kind of what I'm looking for today. All right, good luck. I'll speak to you again tomorrow.